Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Applied Digital, ticker symbol APLD. And so here I am recording this on Wednesday, May 29th, after the market has closed and Applied Digital closed at a price of $4.33, being down 6.28% on the day and continuing down a whopping penny in the after hours trading session. And so yeah, I wanted to go over the chart because it was requested, and looking at the chart, it does look pretty cool. So I'm pretty excited to go over it. And I should note that all of these lines were in the last video. So if you do want some perspective from the past, I believe that came out on the 16th. So you can check that one out as well if you'd like. But the thing that really does stand out to me is this uptrending level here based on these two lows, one being hit on February 23rd and the other being hit on March 6th. And so from that uptrend, it does look like we have been testing it and getting rejected from it. It is acting as notable resistance. And there are some other levels right around there that do stand out as well. One being the 382 from this Fibonacci retracement here. That is at a price of $4.76.3. So, a little bit above where we currently are. And we actually have not yet tested that price, hitting a high of $4.70 on May 20th, hitting a high of $4.67 here, so not quite. So yeah, it looks like the highs have been right around, $4.70. So almost getting to that 382. And then I do also have this yellow line marked here at $4.86. It is somewhat arbitrary, goes back in time. It wasn't open during a big up move, so maybe that level is of significance. But I do think that something that is probably more significant when looking at this more immediate time frame, it does look like we are in the midst of this volume shelf here. And so that does suggest that a lot of the price action has been occurring right around where price is currently at. And so it's going to be tough whether to get above that, but that is also a good sign that, it could be finding support at these current levels. So do keep that in mind. And so what I could see happening is it breaking above this uptrend. And the main reason for that, it's pretty cool. I noticed it just before I started recording this video. You may notice it as well, although this wick down may negate it. I'm not exactly sure. But what we see here is a rising three method. And so that pattern is a big green candle followed by 3 red days and then another big green candle. And so I can flip over so we can look at it here. This is what that pattern looks like. The rising three method, you can't really see it behind me there. But so that is just, a big green candle here, 3 red candles followed by another green candle, and then, going up above these red ones. And so what is the rising three methods pattern? And so this is a bullish continuation candlestick pattern that occurs in an uptrend and whose conclusion sees a resumption of that trend. And so I could see that with this being here. However, we have seen a pullback the past couple days, so maybe that's not looking so good. But one thing that is perhaps encouraging about the consolidation that we've seen here is that volume has come down while price has resided in this range, potentially forming a bull flag, and volume has come down while it was up a little bit yesterday on the 28th during this red candle day. It didn't come down that much, and the pullback that we saw today, volume did decrease. So if we do get an impulse of volume, I could definitely see that being what is needed for the price to be breaking above this uptrend, breaking above the 382 at $4.76, maybe even getting above this yellow line at 486, maybe even getting to $5 a share, and then testing this uptrend as support. But if in case I am wrong and we do see a retracement, I just wanted to do this Fibonacci here, just being approximate, but it does look like from this retracement, the 382 does seem to correspond with the 236 from this retracement that I previously showed. And so that is at a price of $3.84.4. So maybe if we do get rejected from this uptrend, maybe price will be pulling back to $3.84, maybe even coming down to the orange line at $3.50. But if it does hold those levels, they could just be dip buying opportunities before the next attempt at breaking above this uptrend. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.